Hello, everyone, and welcome to Ancient Roman Trading Secrets with General Romulus. That's me, Romulus. This show is brought to you by Backpack Trader. Our goal is to help you become the best version of the backpack trader that you can possibly be. Question for you, have you ever heard of this company, Apple? Ever heard of it? They make phones. And they say they're kind of a big deal. Something happened yesterday with Apple that you have got to see. We'll show you that in a moment. But right now, it's the train wreck of the day. A couple of days ago, it was Walmart. Yesterday, it was Target. Today, it's Cisco. I remember back in 1997, 98, 99, this was one of the absolute darlings of the internet tech market craze. Stocks seemed to double every month. Now, it's trading all the way back to where it was in November of 2020. That's a common theme. Stocks are retracing all of these explosive moves from 2020 and 2021. In many cases, all the way back to where they were before the COVID crash even kicked in. The bond market started all of that. And now, well, go back and look at all the videos. I told you this was going to happen. It's bleeding into the stock market. Speaking of the bond market, you've got to see something here. This is pretty interesting. This is a picture of the U.S. government bond yield. It's a 10-year note, meaning when the federal government borrows money today for a 10-year period of time, they will pay a rate of interest of 2.785% per year for the next 10 years for the right and privilege to borrow even more money. What a concept. The U.S. government borrowing money? Who would have ever heard of such nonsense? However, after hitting a multi-year high, as a matter of fact, this rate back here on May 9th last week was at the highest level since, no, not November of 2020, November of 2018. Keep that in mind. I mean, these retracements in the stock market could have quite a bit ways to go over the next several months, short-term rally possibilities aside. Again, though, 3.2%, the highest level that the U.S. 10-year government bond had seen since November of 2018. Now it's been pulling back. We've talked for a while in the Romulus Centurion Legion that the rate of ascent should certainly be slowing and even giving a little bit of relief. Back on January 13th, we put the all sell signal on everything, stocks and bonds. And about a month and a half ago, well, 5 weeks ago, we said it's time to start putting retirement money back into the bond market with just a little bit, maybe up to 10% of the monthly paycheck instead of the normal 50 or 60% that all those other so-called expert fools are always telling investors to do. However, you can see that the yields are now heading back down. This is possibly, that's right, just a little bit of a head and shoulders, which is a bearish development, meaning that rates could be going lower. It's not such a disaster in terms of the rate itself or positive for the bond price market, because you see the line is an ascending line, not a descending line. That is less bearish than if it was a descending line. But there is a target potential over here on this line. Bring your rates down to right about in there, 248, 25 or so. It is now below the 21-day, heading to the 50, and again, could come down to about 2.5%. This could be several months in the making. However, something to keep in mind, because it is possible that something like this creates an opportunity for the tech market to put a bit of a rally on, because let's face it, these stocks have been absolutely getting smashed. One of the main reasons, if not the main reason for the smash, besides overvaluations, definitely has been the inflation and rising interest rate environment. So let me know in the comments below there if you think that the US 10-year and the bond market in general is going to see a little bit of a reprieve and a slowdown in the assault of the interest rate and inflationary spike that we've been experiencing over the last several months, or if you think this is just a garden variety little pullback that will result in new highs, new multi-year highs in these bond rates over coming days or weeks. Just put that comment below right there. Okay, we talked about Apple. Ooh, yeah, Apple. How about that? There it is. Yes, we've all heard of Apple. Yes, we all know that it is a tremendously well-run company, biggest company in the public markets over here in the United States. Really a success story by every measure. But something's gone on here. Let me demonstrate this quickly if I can. Okay. First, let's get out of here and show we need to get back and look at this from a line chart. It's always easier to look at these longer term patterns on line charts than it is on any other method. Okay, let's pull it back a little bit here. Scale it down. You see how we're doing all this with the charting? Yes, you can flip this around and have your tools work at your disposal as opposed to the other way around. Okay, so Apple, let's do one more zoom out here. Click. You see all this trading action over here, really from November of 2021 till a couple of weeks ago. Then it breaks down. This is a major top. Okay, this is a major topping pattern. Those who have watched the videos and checked in with Club Romulus for a while know I've said for a long time that Tesla put in an all-time top back there. When I say all-time, I mean it probably will never see those highs again. A year ago, when ARK was at 130 after it pulled back from 160, I said it'll never see 160 again. Apple, I don't know if I can go as far as saying it'll never see 180, whatever that was, 183, 182 again, but it's going to be years. Okay, this is a major top. That's the point I'm trying to make here. This is a major top. Let me repeat that. This is a major top on Apple. Okay, breaking down in here, the price target in the intermediate term is about 120 or so, but longer term, it could be even lower. And again, it will not see these highs again for several years. Not quite as definitive as a call on Tesla or ARK that they will never see those highs again. But Apple, it could see the 182 again, but it could be years. Go back and look at a chart of any of the tech stocks in late 99, early 2000, and see how long it took these companies to get back to where they were. The country of Japan put in a high on their equivalent of their Dow, which is, it's called the Nikkei. It hit over 39,000 way back in January of 1991, and it's currently trading at about 26,000 today. So that's like a forever thing. It's never going to get back there, no matter what happens in life, inflation, deflation, whatever. These things can happen. Apple, maybe not a permanent high, but certainly a multi-year high. And if you're in Apple, you've got to deal with this, okay? You've got to contend and face reality. The reality is that we're in a bear market, and I don't really know why you'd want to own too many stocks like this and have a large equity commitment when stocks are, generally speaking, just in a bear market. It can be very dangerous, as you're seeing. Losses just keep piling up. Let's check Cisco's action. Now the market's open a little bit. Okay, Cisco down. Hang on, we'll come out of there and move it back to the candle for the daily action. Cisco trading down 13% today. The volume is already picking up, and it's only a few minutes into the trading day. You see here, Walmart the other day getting down again. Walmart down again. Wow. Target down again. These companies are getting to the point where you're going to be able to buy the entire operation for the change that you find in your couch and in your back pocket. Really just as the stock market also getting hit quite heavily in the last couple of minutes here as well. Okay, well, this is your old buddy Romulus. It's been a great week, a fantastic week. I've been thrilled for the opportunity to continue to share insights, ideas, and helpful educational tips and points about trading and investing. If you'd like to learn more about that, here's an opportunity for you to join Club Romulus. Just click that link below right there. Click that link below, and you can check us out, okay? You can check us out. It's a great opportunity for you to make money while everyone around you is losing money. And by the way, if this does extend into something serious, because it hasn't yet, S&P 500 barely down 20% so far from its all-time highs in January. People still have jobs. The economy around the world, with the exception of what's going on in Ukraine and Russia, still kind of there. If this does extend and turn into something serious, like what we saw in 2008, what we saw in 01, 02, or what we saw for the entire decade of the 70s, which at this point you don't know. You don't know, no matter who tells you out there that it cannot happen. Believe me that it can. It's not a high probability event, but at this point, stocks are down enough and valuations were stretched so high up to the near record highs back at the beginning of the year after a 13-year bull market run, and the excesses were so extreme that, yes, you can step back and say it's possible. It's not, again, a high probability event, but it's possible that we see 1970s, that we see 01, 02, we see 2008. It's possible. You've got to square with that. This is serious, which means in 6 months, 12 months, people around you will be losing their jobs. People around you will need help. People around you will be in trouble. That doesn't have to be you. Join Club Romulus, and it won't be. This is your old buddy Romulus. Again, great week. Fantastic opportunity for me, and I'm grateful for that. I will see you guys next week. I'm heading back to ancient Rome. That's all for now.